What you're going to see on this chart is a buy and hold of the Dow over 10 years. They had a compounded annual rate of return of 0.39. Compare this to a trend follower that could have ran trends, possibly taking pieces of trends from here upwards, and also trends to here and trends to there. So you have a choice. I mean, with trend following, you're able to go long, you're able to go short, you're looking to compound money over long periods of time. Buy and hold in this 10-year period compounded at 0.39, less than the rate of inflation. There's many periods of time throughout the stock market over a 10-year period you don't make money. This is one of the reasons why Hello, this is Andrew Abraham. I want to talk to you about compounding your way to wealth. First of all, I want to clarify really what I'm saying. I don't want you to think that compounding your way to wealth is very easy. It's very difficult. The methodology that I use to compound my way is trend following, and it's not the only way to compound wealth. I mean, people do real estate, people do stocks, they do all kinds of things or invest in their business. But personally, I've been trend following and compounding money since 1994, so I'm going on 18 years. And I personally experienced this. I also want to say this, in all honesty, it's the easiest yet the hardest thing to do. You're going to have deep and extended drawdowns that never seem to end. And then out of the blue, you're going to have some trends that start working. There's no guarantees that trend following will be right for you. However, trend following is a liquid and transparent strategy that most aren't. When I talk about the rule of 72 or trend following and compounding money, this is really what gets to the essence of what I want to talk about. I want to be able to tell you or give you real-time, real money, audited examples of traders, real-time traders that have compounded money over time. But I also want to reiterate again, regardless of the most strict money management filters and rules, there's always going to be losses. Like you can notice, Salim Abraham has his worst drawdown of about 31%. But I'm going to show you what I'm talking about with compounding your way to wealth. The below chart is an example of what I'm talking about compounding money. And you have different durations of time. You can see 5 years, 10 years, 15 years, 20. And then you can have different returns on investment or compounded annual rates of returns, 10%, 15%. I believe I might even have done a 20%, yeah, and a 20%. In reality, when I'm talking about compounding your way to wealth, there's been a handful of commodity trading advisors that trend follow, that understand risk, that have actually able to do this. And the numbers are real, the numbers are audited, and let me give you an example. Like $100,000 at 15% over 10 years is $400,000. $100,000 at 15% over 15 years is $800,000. So basically in 10 years you 4 times your money, and in 15 years you 8 times your money. Below, or actually on this screenshot, is a real-time example of real money. It's called Abraham Trading Company. The CTA is Salim Abraham. I'm not related to him. My name is Andrew Abraham, but we're not related. But really what I want to present is a couple things. The proof that trend following actually works over time. He started in January of 1988. He has approximately $561 million. His compounding annual rate of return is 18.92%. I want to point out also very strongly, his worst drawdown was 31%. Like I say, trend following is not easy. There are ugly periods. But the fact is, Salim Abraham was able to take, let's say, on example, from January of 1988, $100,000, and if you held on, which most people don't, unfortunately, this $100,000 would have totaled to $6,743,434. And you can actually see, these are his returns. And you can also note this year isn't all that great. It's been pretty kind of pukey. Doesn't have to be good. But you will notice that during, let's go back, sorry about that. You will notice in 2007, 2008, when most people were losing in the stock market, he did very nicely, 21%, 28%. But again, I want to reiterate, Trend following is not easy, and there's going to be some heavy drawdowns. As another example, there's a woman. Her name is Elizabeth Chevelle. She learned under actually the Bill Eckhart, and Richard Dennis. She's right here. What's interesting about Elizabeth Chevelle, she's been trend following since January of 1985. Her compounded annual rate of return is 21.82%. Pretty impressive. Worst drawdown, also you need to understand this is not retirement in a box. There are going to be ugly drawdowns. 45% drawdown right here. But if you had invested with Elizabeth Chevelle in January of 1985, $100,000 would have gone to $20,579,720. Or you can see here almost, well, somewhere between 21,000% and 20-something%, 20,000% return. But it's not always a smooth rise. She has drawdowns, drawdown, losing year, another losing year, another losing year, another losing year, and then an amazing year. 65% she returned one year, 187% she returned a year. Let me give you another example. Parksville, which is Tom Shanks, he's been around since November of 1988. His worst drawdown was 61%. He has a compounded annual rate of return of 22.7. There was an article I read in Marhedge magazine, and it talked about one client who invested $300,000 with him back in 1988. That account, approximately, I believe, after taking money out, was close to $18 million. On a simple math, what I did was I just did $100,000. Actually, he might not have gotten it in 88. Maybe it was 94. I don't remember the exact article. You can do an internet search. It's Marhedge, and do a search with Hawksbill. But if you just do a simple math, $100,000 at a compounded annual rate of return of 22.7, it turns out to $13,560,000. Let me give you another point and example. 2007, 20% return. 2008, 96%, when most people were getting their clocks ticked. He also is not perfect. He has drawdowns, minus 15%, minus 24%, minus 27%. Last year he made 57%. I'm not portraying that you should invest with these people. I'm just giving you an example of how compounding of money is possible. Let me show you Bill Eckhart. One second. He started in August of 1991. Compounded annual rate of return of 15.46. You do the math. He basically, you can say he's 1,700% return on your money. Compare that to the stock market. But again, it's not an easy ride. And you can allocate to these investors, these money managers, or you can do the trading yourself. Or, you can allocate to me too. I'm a trend follower, and this is what I do. I'm licensed and everything else. But look at the drawdown this year, down 13%. Not fun. Last year he did 20%. So almost for a 3-year period, he really didn't make that much money. But then for other periods, he did fantastic. This is what trend following is. You have to park your patience and make sure you stay disciplined. I'll give you another example. It's Howard Sider from Saxon. Basically, Howard he's had a compounded annual rate of return of 21.65%. If you want to do the math, which I did, and that's also from November of 1993, $100,000 turns into $4,141,237. All of these guys are trend followers. All of these guys are going to have some degree of volatility. The last couple years he's done very well. 9%, 38, 36, 19, 11, so far 6. But he has ugly periods here at minus 10, minus 46% in 1995. That's not fun to take, and that will happen when you trend follow. It all depends on how you approach the risk. But the whole idea, what I really want to prove to you, is that you can compound money over time. But, there's a proverbial statement here. It's very important. Past performance is not necessarily indicative of future performance or results. Really bear that in mind, because what happened in the past has no bearing on the future. Same thing with when you have a group of trades that don't work. The next trade might work. Or vice versa, you have a bunch of trades that do work and the next trade doesn't work. This is also, I want to accentuate, the risk in trading commodities, futures, options, and foreign exchange is substantial. You can lose a lot of money. Trend following, commodity trading is really not for everybody. But really, what I want to the other side, to make this fair and balanced, these are real-time numbers of real-time audited money managers that have compounded money. You can do this also. I will try to teach you. It's not easy. There's always going to be drawdowns. There's always going to be extended periods of drawdowns, like you can see here and you see here. But the difference with these managers is they kept on going. They know how to think like a successful trader. That's what I want to do. I want to be able to help you become a successful trend follower. I've been trend following for 18 years. I've been able to compound money. I have had ugly drawdowns. I have had extended drawdowns, but I keep on going. You can too. It's your choice. I want to help you. I want to help you become a successful trend follower.